Okay, recording this video. It's just gone 5 p.m. Chicago time on Sunday, the 17th of January 2016. The market's actually just opened, which is why you'll see on my chart here the price indicator on the right-hand axis just buzzing backwards and forwards. Market's trying to find a level. It should quieten down in the next 10 minutes or so, but that's kind of just going on at the moment. So, I said I would record a second video this weekend talking about my 5-step setup that I'm using for taking my trades. And that's what this video is going to be about. I'm going to use Friday the 15th of January's trade as an example of a perfect little setup for a nice kind of short trade that we had. Now, I'm going to be using my new version of the multiple time frame better indicators. These are going to be released shortly, but aren't out quite yet. And the principles that I'm using are applicable to the existing version of the better indicators. It's just easier, I think, now to see everything kind of lining up all on one chart instead of looking at 3 charts kind of simultaneously to take your trades. So that's what I'm going to be using to show this setup. And I'm going to build up this chart, from first principles so you can understand how the indicators look. And I'll probably have to take a couple of goes at this kind of explanation over the next, weeks and months in order to kind of get it more concise. So this is the first time I've kind of had an attempt at this. So just bear with me and I'll try and get my explanation as kind of clean and crisp as possible. Okay, so the first thing, we've got a 500 tip bar chart here of the Emini continuous contract, and the first thing I'm going to switch on is the multiple time frame version of a better sine wave. So I'll put that on my chart. There we go. And all this does is plot the support and resistance levels and the pullback and end of trend signals from 3 different time frames all in one. The lightest lines on this chart here are showing the support and resistance levels and the pullback and end of trends from the lowest time frame, the 500 tip bar chart. And you can see here we've got a little pullback to end of trend on the lowest time frame. And then the bars, the lines get a little bit bolder. Here and here and here and here and so on, and that is the next time frame up. So that's the 1500 tip bar chart being plotted there. And then the boldest lines, the thickest lines that we have on the chart here and here and here are from the highest time frame, the 4500 tip bar chart. So what we have is support and resistance levels from all 3 time frames plotted together. And the beauty of this is that we can see, trending moves when they start to link up and sync up in different time frames. That's when you get really kind of strong moves, is when everything is kind of moving together. So that's the first thing to note on these charts. The second indicator I'm going to switch on for the charts is the better momentum indicator. There we go. Now, better momentum, I always use the 1500 tip bar chart as kind of the reference indicator for better momentum. You can see the signals on the lowest and the highest time frame, but the intermediate time frame is really important for me. So the multiple version kind of zeroes in on that intermediate time frame and plots the exhaustion patterns that you can see here with these blue dots and these exhaustion patterns. And then the bearish divergence patterns are the white dots. The bullish divergence patterns are the red dots, and then the flush patterns are the yellow dots. So just like better momentum, the traditional kind of version of better momentum, but this is a multiple time frame kind of plotted on this chart, and it gives you that intermediate kind of viewpoint. Now, the next thing I'm going to switch on is a new indicator, which is what I am calling the system version of the better indicators, and it plots below those price bars in this kind of combination chart down here. And I need to build this up and explain exactly what's kind of going on. The system is based heavily on the signals from better sine wave, and I've always talked about trending moves being signaled by breaks of support and resistance on better sine wave. And what we're using is the lowest and intermediate time frames to define what the trend is. So on this lowest line here at the level of 1, we're showing breaks of support and resistance on the 500 tip bar chart, breaks above resistance as being red for strength, and then breaks below support as white, showing weakness in the chart. So you can see here we're below this particular support level on the lowest time frame, and it's plotting white dots and bars here on the level 1. The next level up is level 2, which is the 1500 tip bar chart, and exactly the same thing. When we get breaks above resistance or below supports, we plot strength and weakness on that level 2. So for example, here we have an intermediate support level that we've broken, and you can see here in these bars we plotted these kind of dots and lines here just to show that we have a break below support on the 1500 tip bar chart, and therefore the market is weak. And then what I do is a little bit of kind of fancy math in order to combine the two together, throw out any extraneous kind of signals that might be incorrect, and come up with a combined version of what the trend or the strength or weakness of the market is at that time. So this is the combined version of that, number 3. I'm ignoring the highest time frame for breaks of support and resistance just because they are targets, if you like. On the highest time frame we tend to move towards these lines and away from these lines, and you can use the lower time frames to identify the breaks and the actual kind of trending activity, but I don't use the highest time frame in order to determine this strength and weakness or the trend. So weakness is shown with continuous white line here, strength, red line, white line, and so on, and then I just plot a little dotted line back up so we can see exactly where the price activity is when we get those kind of changes. You can switch this on and off on the indicator. It's something that you might find a little bit too fussy on the charts, and so those can be kind of taken away. You can just look at the plots kind of below. Now the last thing to note is that above this kind of there are two forms of dots above this trend indicator that we've got here at this level 3. The first one is shown around a level 4 here, and what I'm showing here is what I called a low risk entry point. It is the first cyclical turn after we have a change from strength to weakness or weakness to strength, and these are low risk entry points when they're being taken in the direction of the trend as it's starting to turn. They tend to be extremely high probability trades, and I'm going to show you how I use those on Friday's trade. But it's the first cyclical turn on the lowest or the intermediate time frame after a change in trend or from strength to weakness, and vice versa. And then lastly, up at the top here, I print this close to the price bars, is we have the end of trends signals just being mimicked on this indicator, just to get a sense of where those actually happen. Tiny little dots here for pullback to end of trend signals on the lower time frames, a little slightly larger dot here for the intermediate time frames, and a big dot for pullback to end of trend on the highest time frame. There's a little bit of difference in coloring sometimes. I'm not going to explain that in this chart or this explanation at the moment. That's kind of a little bit of detail that I'll need some time to explain to you. Just bear in mind the gray or the white are kind of the same thing. Okay, last thing to do, I like switching on this strength or weakness kind of indicator on the price bars themselves, so I can do that using the better sine wave indicator. I'll just go to that. And there we go. That's switch on exactly the same coloring that we have below these price bars on the bars themselves. Okay, so that's how the charts are made up. Now I'm going to walk you through the 5-step setup that I'm using on my trading. And just to say, the multiple time frame version of the indicators allows us to see this more clearly, but the principles are exactly the same if you're using the old version of the indicators on a 500, 1500 or 4500 tip bar charts. There's no difference there. It's just now it's a little bit cleaner to see, a little bit more systematic kind of view of the market. So the 5-step sequence goes like this. The first thing that we have to see before a market turns, whether it's from an uptrend into a downtrend or a downtrend into an uptrend, is exhaustion volume. On the way up, we need to see exhaustion volume, and then before the trend changes, we need to see volume weakening. And the first sign that volume is weakening is a bearish divergence signal here. This exhaustion buying is kind of getting the move going from this low that was set off here, so that's kind of showing the explosive volume that kind of gets the move in going to the upside. But then we start to see weakness when we've had exhaustion buying and bearish divergence sets in, and then we get another exhaustion buy and divergence set in, pattern kind of set in here. So we're starting to see weakness in terms of volume, but that's the first signal that we're starting to run out of puff on the way up. On the way down, it's also a bullish divergence signal that you start to see as the first signal that we're running out of puff on the way down. But for uptrend into a downtrend, that's the first signal. Next thing we need to see is price starting to exhaust and go kind of confirmation with the volume signal, and that's where we're looking for these pullback to end of trend sequences. We see a little pullback to end of trend on the lowest time frame here, and then another one pullback to end of trend on the intermediate time frame. Now, because we're running up into the second time frame, still in a trending move, we kind of wait after this initial sign of weakness on the 500 tip bar chart. We need to wait till we get kind of confirmation on the next time frame up, because this is a strong move. It's going to continue to the second time frame, and that's why we're waiting for this end of trend. So I like to mark those with these kind of larger dots here, just below the price bars, and that shows an end of trend. So that's the first sign of that the trend is changing. The second sign that the trend is changing is that we get an end of trend signal. The third sign is that we get a support being broken on the downside, and that's when we break the support here. You can see all of a sudden we've gone to white bars here on the strength and weakness kind of indicator, and we plot a vertical white dotted line to show that first sign of weakness. But you never jump in when you've seen that first kind of sign of weakness. Always going to have a push back up, a testing move. You know, this is where we just made kind of almost a recent high at this point. We've got to come back and test it. The market never just gives way at that point and just goes into a downtrend without some kind of testing move back up. And that's where the low risk entry point comes in, where we test back up into the first cyclical turn after a break to the downside. And if that holds, if we do not get any breaks above those cyclical resistance points here, here, and here, we know that the market is weak. So after the low risk entry point, we're looking for confirmation that we really do have a break to the downside. We have a little bit of strength afterwards where we just punch above the resistance momentarily. It gets caught by the next highest time frame. We can't break through that. We've got flush signals going on here. That's not a change in trend because we've got all this volume behind us showing us that we've exhausted and we've got bearish divergence and flush patterns kind of going on. That's like a last roll of the dice, the last little push back up. And then as soon as we start to break two time frames simultaneously, we know we're in a strong downtrend. And at this point here where we get the lowest time frame and the intermediate time frame broken at the same time, that's when we got a strong move and a trending move to the downside. So the sequence goes again: exhaustion, buy, and bearish divergence. That's the first sign of weakness. The second sign of weakness is then we get a pullback to end of trend, so price confirming on the upside. Then we get our first break of support, which is showing the weakness in the market where the supports are not holding. That's sign number 3. And then we get the low risk entry point, the push back up, cyclical turns. We don't get those broken to the upside. They kind of turn away at those points, and that's when you want to be starting to enter into this trade. And we get confirmation that we really do have a break to the downside when we start to break two time frames at the same time, and we get a strong move to the downside. We have a little bit of a rest after that, and then we continue down again. Okay, so let me just pull up this annotated chart to show you that sequence numbered here, 1, 2, 3, 4, 5. We start with a bearish divergence signal on volume, on better momentum. Then we need to see price confirmation with a pullback to end of trend, number 2 here. The first sign of weakness is when we break support, number 3, and here's the low risk entry point where we have push back up to test the price. That's almost like a head and shoulders type pattern, so that's the low risk entry point. And then we get confirmation when we start breaking two time frames simultaneously here at number 5 that we've got a real kind of strong downtrending move kind of going on, because the 500 and the 1500 tip bar chart are both breaking below those supports on the way down. Now where you want to be entering is somewhere between 4 and 5 after the low risk entry point and confirmation on the way down. You know, if you're really conservative in your trading, you can wait till you get the double breaks and you can take out kind of strong trending moves up until we get the pullback to end of trend kind of sequence down here. But if you're like me, you kind of like to be kind of in a little bit early, happy to sit through a little bit of volatility. Somewhere after 4, after these pushes back up, is a good place to enter. I also like to see pushes back up with blue professional bars on the way up. They get broken, their lows get broken on the downside. That's kind of signals that the professionals are getting short on those little pushes back up, and those are really nice little signals there. So you get 2 or 3 little opportunities, kind of pushes back up to kind of get into your trade, and then taking profits on the way down here towards pullback end of trend an end of trend here. On Friday's trade, I was in at 78.25. It was just after this low risk entry point, kind of as we were going through here. I had to sit through a little bit of strength, a little bit of jiggery pokery kind of down here. But then as soon as the trade started to go my way, I actually pushed out my profit target to 10 points on the way down here. So I was in at 78.25 and out at 68.25, and for me that's a big trade. Normally I'm looking for 4 points, maybe 5 points on a good move, but everything lined up really nicely. And as soon as these supports, even on the 3 time frames here, were starting to get broken here at number 5, this thing really started to run nicely. Nasty little pushback at this point here, but I was out at my target kind of down here. So when I'm looking now at my charts, I'm looking at these vertical white lines for going short or red lines for going long, and does everything kind of line up on the left hand side of one of these white lines with a bearish divergence and a pullback to end of trend signal that then gets mirrored with a nice low risk entry point and confirmation down here. So I'm looking at the balance kind of around left and right hand side of a white vertical dotted line in order to make an entry and get confirmation down here. The reverse is true for going long. So you'd be looking for red signals around a red vertical kind of dotted line in order to take entries on the way up. So for me, this is kind of a game changer in my trading. I'm moving from 100% discretionary trading to about 30% discretionary trading and 70% systematic kind of trading. And I'm trying to look for these signals, the white signals for taking short trades, and then red signals, the reverse of this, for taking long trades. So that's my first attempt at recording a video explaining this kind of systematic setup. It'll probably take me a couple of times to get this right, kind of get it succinct and crisp and get the language right, but I hope you appreciate that we're doing something a little bit different these days. So the methodology evolves, the indicators evolve, and as I said, the indicators, the multiple time frame version, should be available hopefully in the next couple of weeks. We've got some final kind of glitches to kind of get over, but then they'll be released, so look out for those, and I'll let everybody know when they're available. Hope your trading is going well. Again, we get Monday off because it's Martin Luther King Jr. Day, but then we're going to have some good trading for the rest of the week. Yeah, you just got short 78.25, short 78.25. Just leave my stop target where it is, just for the time being. And this could be it, because we've got cyclical resistance due. A couple of time frames, testing back up after pullback, end of trend exhaustion by bearish divergence. What we never saw at the bottom today was exhaustion sell. Not pre-open, not this blue professional bar, which is incredibly significant. And we've seen plenty of exhaustion buys, bearish divergence, but nothing on the downside. So system view, what's going on? We've got a little bit confusing there. So strength with coming into exhaustion by bearish divergence, flush, bearish divergence again, and we start breaking into weakness. Low risk entry point around here, and then we come back up. Here's the double. Here's okay. I better move my target. Let's get onto that. All right, there we go. I just moved it out to 70.25. We just got caught up temporarily on that support. It's just pushing out at up bar. Come on, come around. So, yep, weakness starts in, low risk entry point comes in, and we just need a double break of supports to kind of get confirmation. So it could be break of this support. We've got another support to go on 1500 intermediate time frame, but not yet. And we're up bar. So blue professional bar at the highs, U-turn, caught it temporarily, hammered bars up, weak. So break through this 75.5, break us into another push through supports. There we go, we got the break, initial target 74.25 got hit, come through supports, little gathering just as we give way, and we're going to exhaustion style on the 1500 tip bar chart. That's where we're going, and have a look at this, I reckon, too. So cyclical support we'll have on 1500, and that could be falling through the ice. So see that happen. Alright, that was quite a retrace all the way back up. Entry. Out at a bar though, Rambo pattern, coming back down. We've still got support in here and here. There's the go. Now it's just that little bit of strength. Now we could be dropping through the 73.5. So my target's 68 and quarter. Down here 74s. Blue professional bar. So falling through the ice, come on. Let's do it. Exhaustion cell, getting the move going. Alright, well, breaking a triple, just having a little think about it on 1500, just backed off these Rambo pants. But no blue professional bars. So support broken, support about to be broken, broken here. 68.25 was what I'm looking for. That's what's in jeopardy, but let me just leave it where it is. This is way past what I'd normally do. So we got a double. That was a double there. Says low risk entry point, a little bit of strength, and then bang, we collapse into a confirmed downtrend with both time frames broken, and that's what I'm looking for. 68.25. This exhaustion cell really is just getting the move going, so we've got to go all the pullback end of trend moves on these intermediate time frames. But come on, let's go 68. Whoa, just taken out 68.25, and all of a sudden it was just bursting here and then bang, just took me out. I wasn't taken out here when we hit it. I had to sit through a retrace, which was not nice, but out 68.25 for 10. So that was a nice one, and that just shows this setup as we go. Exhaustion buy, bearish divergence, pullback under trends, first sign of weakness, low risk entry point, and then confirmation of the downtrend. So good. And we're going down because we've got to have another. That's getting the move going. We've got to see another one on the way down, pull back into trends. So excellent.